So if you're watching this video, you're probably trying to figure out, I'm trying to look for my first house. What kind of interest rates would I be looking at? And where would that put my payment for housing affordability? So in today's video, I had the topic of this morning. It was kind of brainstorming. It's like the topic of, I don't know. And when it's okay to say, I don't know. So let me put a little bit of this in context. Last night at dinner, we're sitting around, and me, my wife, and two of my kids, and we're sitting there, we're debating this topic. And I'm sitting there, and I'm just, all of a sudden, I just sit there like this, and I'm just sitting there for about 5 minutes, and everybody finally looks at me, and they're like, what are you doing? And I'm like, you guys are debating a topic that none of you have a clue about. So then I thought this morning, I'm like, well, I see so many commentators out there on TV and YouTube and things like that. They're giving you all these predictions, but they really don't know. And let me put this in the context. Where interest rates are going to be, that's one of the biggest questions I get on a daily basis. So that's really what we're going to dive in on today. And I want to show you where even the Federal Reserve members, people that sit on the Federal Reserve, they have different opinions. So let's get over to it. So what we start out on every video each day is where mortgage rates are. These are the top 6 products people use when they're buying their first house. But let's really dive in and take a deep dive into where mortgage rates are and where they're going. So the first thing I look at on a daily basis to try to give me a little bit of insight what's going on in the economy, what the Federal Reserve might do, and what the bond market might do, is I go over here to the economic calendar. So this week, there's really not that much out. It's Thanksgiving week. I'm expecting this week to be really, especially Thursday and Friday, we're not going to be open, so the markets will be basically closed. But I just want to give you some context what's coming in this week. There's really nothing coming out. There's some existing home sales. They're coming in line, but basically almost exactly in line with what economists thought. The only thing that might play a little throw a little curveball in this week's data is the initial jobless claims, because the Federal Reserve, they want more and more people to lose their jobs. They think because if people lose their jobs, they're not going to be able to buy stuff, and that's going to cure inflation. It used to work in the past. I don't know if those dynamics work in today's market, but let's get over to what I was talking about. So right here, this is the members of the Federal Reserve. Now, there's more members on this committee that don't have voting rights, but these are the people that actually have voting rights. So they're sitting right here. The Federal Chairman Powell, when you ever hear me talk about Federal Chairman Powell, he basically runs the Federal Reserve. And then we have other members right through here. So I just want to give you some context of who sits on the Federal Reserve and who votes. So these are those members, okay? But there's other people that play a role in this. So what they do it basically quarterly, so 4 times a year, is they come in and they do what we call the dot plot. Okay, what the dot plot is, it's right here on your screen. What they do is every member of the Federal Reserve, they come in and they basically put a dot next to the interest rate that they think where the federal funds interest rate is going to be. So the federal funds interest rate is basically the interest rate that the Federal Reserve controls. Okay, so here's where we are in 2023. It's right through here. So the federal funds rate today is 5.25 to 5.5. So you're right about here. Okay, so if you see all these blue dots, it's at about 5.5 to 5.75. That's why everybody was expecting the Federal Reserve is going to actually increase rates at the next meeting, the last meeting that they're going to have in December. Well, there's a 99% chance that they're not going to do that. Okay, so this data is, I'll say, is going to be inaccurate because we're going to be right in this realm right through here. Okay, so that's really not what we're going to talk about today. What we're going to talk about today is, let's go into 2024, because one of the biggest questions I get from people is, Dan, where's rates going to be next year? So I always say, I really don't know, but I can give you some forecasts, some kind of, just educational predictions, but I really don't know. So let me fill this in. Right through here, all these dots are members of the Federal Reserve. They come in and they say, okay, here's where I expect the rates to be. So you have people putting a dot here, 5 or 6 dots here, and all through here. So what this means is not even on the Federal Reserve do they have a consensus vote. If everybody was on the same page and they knew exactly where rates are going to be, you'd have all of the dots on one line. Well, you don't. So my context for today is, guys, I follow my channel, follow as many channels as you can to find out as much education about real estate as possible, but nobody really knows what's going to happen. Okay, what we do is we just analyze all the data that's coming in on a daily basis to kind of forecast what's going on out there. Same thing with housing crashes. Some markets are seeing a big turnback. You have Austin, Texas, it's down almost double digits. Then you have Hartford, Connecticut, it's up double digits. So if there was a housing crash that's just carte blanche, it's all over the country, well, you'd have a housing crash all over the country. But even people in that area have a little bit of different views. So basically, because there's really not much economic data this week, I thought I'd educate you guys on a little bit how, the dynamics behind where interest rates are going, how to analyze it, and so forth. But what I want to give you, just as some context, is even members of the Federal Reserve don't really know where interest rates are going to be in 2024. And then let's go out to 2025. Look at this. You got dots going from, what is this, 2.5 all the way up to 5.75. Okay, that's a 3% adjustment in where they expect rates to be. What are they going to be? We don't know. Okay, so follow me on a daily basis. I can give you kind of a crunched version. If you're looking to buy in the next 30 days, I can give you some, ideas on where rates are going to go. I think I have pretty good ideas on that, or where we're going to be in the next 30 to 60 days. When it goes further out than that, folks, we don't know. Nobody really knows what's going to go on with housing prices and interest rates. So follow us on a daily basis, and we can educate you guys on exactly what's going on. So based on the economic news we have today, that's basically nothing. We have existing home sales for October, 3.9 million. It came in previously at 3.9. Nothing's really going to come in right now. The FOMC, with this number, or this data shows you right here, is the FOMC meeting minutes. So the FOMC, the Federal Reserve, met a couple weeks ago. They're going to actually give us their transcripts today to kind of give a deep dive into what they spoke about at their meeting. This usually doesn't really play that much of a role in where rates are going. So right now I'm expecting this week to be completely flat. So if we go over to this information right here where you're seeing where rates are, look at yesterday. How many times have we jumped in here and the rates are up, 10, 15, 20 basis points? Some days it's jumped 0.25% in one day. The normal markets are like this. They tick up a little bit and they tick down a little bit. Usually we don't have those major swings. So if you want to follow this, you want to see where mortgage rates are going, and it's also where house prices are going, follow me on a daily basis, because this is the information I try to relay to you guys to put your decision on, should you buy a house in today's market, or should you just wait on the sidelines and rent for a while, wait till your market cools down a little bit, maybe wait for rates to come down. It's completely up to you guys. But please follow me on a daily basis so I can give you insight on what's going on. So without any further ado, based on the economic data, here's what we have. Here's what I follow on a daily basis. I follow the bond market, okay? Why do I follow the bond market? Especially this one right here, right in the middle of your screen. Well, the reason why I follow this one is it's an MBS. What that represents, it's a mortgage-backed security. It's a mortgage bond. Okay, so that's why we follow it, because the yield on this bond is the biggest component of your mortgage rate. So that's why we follow this bond. We're just seeing right here is the price of that bond. So all you need to know is this. The simplest way I can explain this is right here. If the price of the bond is going up, which you're seeing in this occasion right here, it's +8. That means the price is going up, the yield is coming down. There's an inverse, there's a yin-yang effect. So if the price is going up, rates are coming down. We love when the prices are going up. Very rarely did we see that in 2023, but in the last 2 weeks, we saw mortgage rates drop almost 0.75%. So this number has been rallying and rallying and rallying. Where it's going to go from here, well, there's really no economic data for the rest of this month. And then in December, we do have a Fed meeting coming out, but it's going to be data dependent. What they follow is they're following basically where inflation is going. So most days I talk about inflation, the components of inflation, and where it's taking us, because that gives us insight on what the Federal Reserve is going to do, and then especially where mortgage rates are going to go. That basically is explaining to you how you really, nobody really knows what's going to go on with interest rates and also house prices. So follow me on a daily basis so I can give you my forecast each week so you can make a prudent decision if you're looking to buy a house into this market. So 2 things. If you're in the market right now to buy a house, you've probably maybe got already pre-qualified and somebody already quoted your rate. If you did, then what I'd like to do is offer you a free service that we have. We can analyze your rate and your fee structure, basically your loan structure, in one easy, simple form. You're going to get a loan estimate, and you see it right through here. What you do is once you apply for a loan and they pre-qualify you, the lender has to send you out what's called a loan estimate. If you want us to compare it for your rate and your fees to over 70 of the country's largest banks, credit unions, and finance companies, we'd love to do that. So what I'd ask you to do is upload your loan estimate into there. What I'm going to do is I'll respond with a video basically showing you the loan that you're proposed, the loan that we can get you, and then which one it was best for you. And even if the other lenders have a better terms and rates for you, that's what I'm going to tell you. I'm going to say, God bless you, take their application, take their loan, because it's putting you in the best situation. However, most of the time we're able to get you maybe a little bit lower rates, maybe a little bit lower in fees, or maybe all the above. We can get you a lower rate and lower fees. So that's number one if you've already been pre-qualified. If you're out there, you're kicking the tires and you're like, hey, Dan, I just don't know. I don't know if I can qualify with my income, my credit. Do I have enough money as a down payment? Well, don't disqualify yourself. Reach out to us. We'd love to help. A couple of different ways to do that. You can hit the Apply Now button right up there. What it's going to ask you is a series of questions, basically to vet you, to see exactly what position you're in, what kind of loan might best qualify you, and then we're going to associate you or link you with a specialist on our team that specializes in that loan product. Or you might be saying, Dan, can I call in? Can I email you guys? Well, absolutely. Go to therateupdate.com, and what you're going to do is scroll right down here. We got a bunch of tools and blogs and information through here. What kind of mortgage programs are best for you, mortgage calculators. And then when you get down to the bottom right through here, what you're going to see is a couple different ways to reach out to us. One, give us a call at 844-775-5626, or you can email me directly at dan@therateupdate.com. So thanks so much for watching, guys. God bless. Have a fantastic day. I'll see you tomorrow. Bye-bye.